What's up, everybody? Welcome to Heresy Financial. I am recording this 2 days after the election. It is currently Thursday, and the markets are still open right now. And so what we're looking at today is, number one, I was very wrong about my expectations that there would be no contested election. Clearly, that was a bad call. But doesn't really matter because I said, even if there is the worst case scenario with a contested election, I still anticipate that we're going to have a market rally. And so clearly we've seen that. Asset prices, gold, silver, Bitcoin, the stock market just doing extremely well over the last 2 days. So we're going to look at that, look at why. Let's dive in. All right, so if you have not been paying attention at all, the markets are loving this contested election. There was no sell-off. In fact, even that night, even the night of the election, if you joined me on the live stream, we did a live stream for a few hours that night, and the futures started rallying that night, and equities haven't looked back. Now, that's not necessarily the case with gold. Yesterday on Wednesday, gold had a little bit of a rough day, but it's made up its ground today. So we're going to look at each asset class, see what it's done since Tuesday night when the market closed and the election results started coming in. So first up on the list is the S&P 500. The S&P 500 is currently up about 4.5% since the market closed on Tuesday. And again, I'm recording this while the market's still open. So if you are watching this tonight or tomorrow or sometime, obviously markets can change, but currently it's at about 35.23, and that's about 4.5% up since the close Tuesday. Gold is up about 2.1%. It's at 1952, and silver is up 4%. That is currently at 25.36. The dollar is down 1.1%. So this was another thing that I said would happen following the election. We'd see the bear market in the dollar versus other currencies resume. We've had a little bit of a consolidation here for the last month or two, and so I had said that we would resume to see the dollar would resume its fall, and that has started again. And Bitcoin's been the big winner recently. It's up about 8% since the regular market closed Tuesday night. Currently it is at 15,130, and GDX finally is up 5.1% since the market closed on Tuesday. Up at 41.41 right now. Now the question is, why is so much? Who is buying? Why are they buying? And I'm still going back to the number one reason that I've stated every single time since my price targets changed to the end of the year. If you've been following me for a while, I've been giving price targets that have been a couple months out for this entire year. I started it last December, or maybe it was last November. In either case, though, the last couple of months, I had my price target set for the election, and then I pushed them out towards the end of the year. And the main reason behind it was uncertainty prior to the election, followed by certainty. So I've been saying for a while now that it doesn't really matter what the results of the election are, just that people and investors understand what those results are, just that there are results that can be looked at. There's been a ton of cash on the sidelines that as soon as some certainty came into play and people could start to see, hey, this is a likely scenario, likely how it will play out. As soon as that certainty starts to enter the playing field, you have a ton of cash pouring in to buy assets in whatever way that investors decide is most appropriate. And this is one of the reasons why initially we saw a drop in yields on bonds while we were seeing a rally in stocks. And a drop in yield in bonds means that people are buying bonds. And so you don't typically see at the exact same time a big lift in both bond prices and stock prices because, historically those tend to be a little bit less correlated, because if you're having a ton of money going to stocks, that means people are more, ready to take on some risk. If you have more money going into bonds, that means, hey, we want to be a little bit more conservative with our money. And so initially you had a big pop in both. That's simply because a lot of cash on the sidelines was rushing in. So suffice it to say what has happened over the last few days, even with the election uncertainty, and I'm not going to go into the details about the contested election. There's a lot of channels, a lot of people who are way smarter than me and way more engaged in the political sphere and understand the mechanics of how this could or will play out. I'm not going to get into that at all, but suffice it to say that my views on asset prices and my targets for the end of the year haven't changed. For the S&P 500, I still maintain my price target of 3,800 by the end of the year. And again, we're currently at 35.23. We've seen massive consolidation, massive shaking out of weak hands, a lot of cash starting to come back in. We've got a lot of bullish momentum that can carry us up to 3,800 by the end of the year. My target for gold by the end of the year is still 2,500. We're about 1950 right now, and this will be largely driven by the short squeeze that starts to play out now that we're breaking out of this range. We've been in this bull flag pattern for a while. We've been consolidating, and now that we're finally breaking out of that, we're going to see a short squeeze by the gold trading desks, closing out all their shorts, still at record levels here, and so that's going to drive the price of gold much higher very, very, very quickly. Silver, I maintain my price target of 35. A lot of this is going to be due to the rally that's going to happen in gold. We'll be driving some money into silver as well. Added on to that, some of the fundamental drivers of silver, which is driven by its commodity value more today than its monetary use. And so I do expect that we'll see a rally in silver up to 35. And I expect it to kind of stop there simply because historically that's been a price at which it's been difficult for silver to get above. And so I think we'll probably stall out at silver a little bit, right around that $35 mark. The dollar, I maintain my expectation that it'll continue its drop to about 88. And again, we're looking at the dollar index, which is the dollar compared against a basket of other currencies. And finally, GDX, the Gold Miners Index ETF. Just a fun one there. I expect this will probably get somewhere around 55. We've seen the same type of consolidation pattern here in GDX, this bull flag pattern that we've seen in gold. And so while we have this breakout starting to happen here and the rally pushing gold higher, that should push gold miners up very strongly as well. Okay, you caught me. I forgot about Bitcoin. So here's a Bitcoin chart here. While I was editing the video, I realized I forgot Bitcoin in the video. So the reason why I forgot it though is because my price targets were set in August here, right where these crosshairs are on this Bitcoin chart. And I had two price targets. I said either 10,000 or 15,000. I was relatively unsure which direction it would go, and we actually hit both. We very quickly after I posted that video at the end of August, dropped down to 10,000 and just recently hit 15,000. For the first time this year. Obviously, we hit it back in 2017 on Bitcoin as well, but we're back up to above 15,000 now for Bitcoin. So both my price targets have been hit on Bitcoin, and I do not yet have any updated price targets for Bitcoin. Now, I will save my thoughts on what I think the new political environment will do to assets and asset prices longer term until we have a little bit more information about how this will play out, how the contested election and the lawsuits by Trump against the cities and the states for vote counting, how this all turns out. And so I'll keep watching until we have a little bit more certainty there. But for now, looks like it is blue skies ahead for asset prices. Not advice, not a recommendation, just education. If you're going to make an investment or trade on this, I always like to make sure that I am hedged. And if you'd like to use options in order to play, so you limit your exposure into these plays or hedge your risk or make plays that are a little bit more complex due to timing or volatility, check out my new advanced options course. This is the last day of the sale, the launch sale. It's currently $47. So many of you have bought it already. I appreciate everybody who has jumped on it already. This is the last day of the sale. Get it. The link is in the description of the video. As always, really appreciate you guys. You guys really are the best. Have a great day.